What's up everyone, my name is Anthony, and in this video I'm going to do some technical analysis on the S&P 500, NASDAQ, VIX, and AMC, and then dive into the wave counts and specific price predictions that I have over the next couple of trading days or so. And first of all, to start off on the S&P 500, we had a huge green trading day on Friday, and we were playing calls for the entirety of this green upside. And here's just a quick sneak peek at some of the profits from playing calls on Friday's trading day. And this is just a small Robinhood account I have on the side, since I don't usually use Robinhood to trade anymore, but I thought it'd be fun to play some calls on here as well. This account is up more than 50% today, just from one trading day, and of course, all trading signals are provided in the Discord, and these profits are just from SPY calls. So as you can see, the profit loss chart, which is pretty good on Robinhood, is pretty much exactly the same as the S&P 500 on Friday. And these calls over here, some of them with various strikes and expirations, we're getting some really good money with the upside in the markets. So if we navigate back to the chart, the whole reason why we're playing calls is that we're targeting this broader term wave 3 within this huge sequence of waves. So just to zoom out a little bit on the S&P 500 and break down the wave counts, we have a wave 1 up, wave 2 down, wave 3 up, wave 4 down, and then we're working on this huge wave 5, very extended. And as you can see, the extensions form from these inner wave counts, so 1, 2, 3, 4, 5, and this wave 5 also extended to a wave 1, 2, 3, 4, 5. And similarly, this wave 5 is also extending into a 1, 2, 3, 4, 5. So we're targeting this minor term wave 3 of this broader term nested sequence of wave 5. So now if you look at SPY, which is just a reflection of the S&P 500, we can go down to the 5-minute smaller time frames and really dissect the wave counts from here. So overall, we're really targeting this wave 3 in golden yellow right here. And we can break down this wave 3 into another impulse wave. So a 1, 2, 3 up here, 4 down, and then a 5 up. And we're targeting this kind of wave 5 of wave 3 of upside. And we can further break down this wave 5 right here into its individual components. So a 1 up, 2 down, a 3 up, 4 down, and now we're working on this wave 5. And we will likely extend over to the 437 to 438 price ranges, which are just stemming from some Fibonacci extension levels that are found previously. And after we hit this top of this wave 3 golden yellow, we can expect some kind of retracement for a wave 4, and then a final push upwards for a wave 5 to finish off that nested sequence of wave 5s, and then we'll come down for bear markets after that. So overall, we still have some upside left, and that's why we're still holding the calls. At least for me personally, I'm still holding calls because we're still targeting this wave 5 of this wave 3, and over here, they're take profit zones, and we're getting close to them. And if we actually zoom into this wave 5 right here, we can see that we're kind of getting another structure forming here. It's like maybe a 1, 2, then a 3, 4, 5 to finish off this broader term golden yellow wave 3. So that's just the price predictions over the S&P 500 for Monday, Tuesday's trading day, and then I'll post an update video as well in YouTube and in the Discord about what's going to happen after we hit this top of the wave 3. Because if we zoom out actually to the 15-minute time frame, we can see that overall this wave 2 right here, let's go back here if it loads. So a wave 1 up, a wave 2 down. This wave 2 was a complex correction, a WXY, and this actually retraced to around 38.2%. So right here you can see retraced to the 38.2% retracement level, and that is not very much for a wave 2. So what you may see happen for the wave 4 is that it will trace a larger distance. So it might retrace somewhere around, if we go here and take the levels, let's say it stops somewhere at the top of this blue rectangle, we could actually head down pretty far. So we look at those levels on the left right there. We could head down to somewhere around the 0.5 to 0.68 levels, which would be under 430, so 426, that area, for even 424. Although it's unlikely to be this low, we could get somewhere around these levels for the wave 4. So overall, you don't really want to be caught up in calls when we do retrace for that wave 4. But until then, there is still some slight upside left. And as you can see here in the SPX, which is just the S&P 500 index, we do have a major retracement level right here at the 2.618 extension. And this is just based on this wave 1 up here. So I took the length of this wave 1, dragged it down to the bottom of wave 4, and we see that the 2.618 extension is right around 4,400, and that can be a possible target of this wave 3. So this wave 3 right here corresponds to this wave 3 in golden yellow right here. So that's what we can expect to see over the next couple trading days or so. And that's why we see some more upside left here, maybe around 0.6% to 0.7% left of upside, and then we'll come retracing for that wave 4. Overall, things are looking really good. This is a very clear impulsive wave. As you can see here, there's a lot of chop. There's a lot of choppiness, like down, up, and then up. But if you use wave theory, this becomes a lot clearer, especially if you know that this is a wave 4, pushing up for a wave 5. then down for a wave 4, then a 1, 2, 3, 4, 5. And this is exactly what you expect to see when you do come close to 3 4s and 3 4s, so like 3 4 here, 3 4 here. You'll see these type of price movements in any stock or index. So yeah, definitely still bullish as we work upwards for these upper price targets for that wave 3, and then we can expect some choppiness for the resulting wave 4 and then wave 5 push to the upside. And now we'll look at the NASDAQ, which is represented here by the triple Qs. So just we have a simple impulsive structure forming, so wave 1 up, wave 2 down, wave 3 up, and now working on this wave 4 of choppiness right here, and then the final push upwards for that wave 5, kind of just like in the S&P 500. And as we see here, we kind of are bouncing back and forth, maybe possibly like this in the future for that wave 4. This could take the form of a complex correction, a triangle, most likely a complex correction, especially since we got a zigzag structure for this wave 2. We might see some kind of really stalled out price action for this wave 4, and then we'll push upwards for that wave 5 in the future. Overall, things are looking really good for the tech sector still. We saw that last push to the upside before the bear markets hit. And if we zoom out on price action previously, we did have that complex correction forming here. So a WXY for that fourth wave completion right here. And now working on that wave 5. And this wave 5, just like I said, subdivides into a 1, 2, 3, 4, 5. So tech sector is still looking bullish. I would not get into calls at this moment because we are still working on that wave 4. And this can be very choppy and sideways and would not make you any money. So once we do bottom out after this wave 4, which could correlate to the bottom of the wave 4 here in gold and yellow on SPY, we would expect that last push to the upside for this wave 5. And overall, we have on the VIX a very similar structure forming, not in terms of wave theory, but we do see basic support and resistance levels being very clear here. So these blue lines right here are areas of previous support and resistance, and these white trend lines are just previous support and resistances as well. And as you can see, if we go down to the 1 hour time frame, we are closing under this blue trend line, and I do see a push to the 13 level when we correlate to the final wave 5s in these indexes right here. So as you know, when the VIX goes down, the indexes go up, and we did see that push to the downside as the S&P 500 and triple Qs pushed upwards on Friday's trading day. We could see a revisit to these trend lines here, maybe a push above, but overall we should be heading downwards to this white trend line as we kind of unfold these nested wave 5s in the market. So just to summarize, as we get closer and closer to the nested wave 5s top of the S&P 500 and the NASDAQ, we can expect the VIX to gravitate towards this level of support and resistance here around 13 in the white trend line. And because we're already falling under this blue area of support and resistance, we're going to start reacting to this level next. And we've already started to approach there previously. We had some upside in the markets, though I do see a revisit to these lower areas in the future as we get closer to that bull market top. So that's going to be it for the broader market analysis. Now let's look onto AMC, which is kind of a reflector of the whole meme stock market. And we do see an impulsive structure forming. So wave 1 up, wave 2 down, wave 3 up, and then a wave 4 dragged out stalling price action over here. And we did bounce off this buy zone multiple times on AMC. And I do see a revisit to some higher levels for the wave 5 push in the future. And typically what you see happen for meme stocks is that when the markets go down or don't have the best price action, when they don't go up, the meme stocks do go up. So we could possibly see a correlation between this wave 4 drop here in the S&P 500 and this wave 5 push to the upside in AMC. That is not necessarily going to happen, but based on price action previously, we most likely will see this stock pop off when the indexes do not. So that's just to keep in mind. I haven't played calls yet on this stock because I was expecting some upside to the markets, and I don't want to play meme stocks when I expect the markets to be going up. But once you do get closer to these temporary topping levels here for this wave 3, I will look into calls on AMC and potentially get an on buy opportunity for this stock, especially since we've had this really sideways price action for the wave 4, which looks exactly like what you would expect for a wave 4. The implied volatility for this stock has dropped significantly, and that gives you a good buying price for the options because they're not as overpriced as they were, for example, at the top of this wave 3. Because when you have a huge push to the upside, the options are going to be overpriced with the implied volatility increase. As you stall out here for this wave 4, you can actually get a buying opportunity to actually really get some good profits for that wave 5. And here are just some levels of potential areas to target. Even the 80 levels look good. Even the 90 levels are a possibility, especially if this wave 5 extends. However, that is probably a little bit unlikely just because this wave 3 extended so far. But overall, we do see some upside projected for AMC, and we have bounced off this buy zone multiple times, which is good. But after we finish this wave 5, we can expect that downside to hit for that just typical ABC correction. What really happens after a wave 5. So when AMC pops off for this wave 5, you can also expect other meme stocks like BlackBerry, Wish, Space, all those other meme stocks to pop off as well and follow with AMC. That's why I like to talk about AMC first, because it's a really good reflector of the general meme stock market. That's going to be it for the broader market analysis and VIX as well as specific stock picks. So I'll keep you guys updated in the Discord as well as here on the YouTube. Thank you so much for watching, and I'll see you next video.